Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The country's trade deficit narrowed in September as export sales continued to rise despite U.S. tariff woes. The Philippines' outstanding debt eased in September after hitting a record high in July, following the government's repayment of more borrowings than new issuances. And Indonesia seeks zero tariff on palm oil after U.S. Malaysia deal. First, let's take a look at how global financial markets performed overnight. Wall Street's three major indexes lost ground on Thursday as Meta and Microsoft shares tumbled on worries over surging AI spending, while investors also digested a more hawkish tone from the U.S. Federal Reserve. Meta shares sank 11.3% for their biggest one-day drop in 3 years, while Microsoft shares ended down 2.9%. The results follow the Federal Reserve's delivery on Wednesday of a widely expected quarter-point rate cut, but it raised doubts about future policy moves when Chair Jerome Powell said that another cut in December was not a foregone conclusion. He had led traders to pare back the odds of another cut in December to about 70%, down from more than 90% earlier in the week.
I think that they should not cut again in December. The market is saying there's maybe a 2/3, 1/3 probability likelihood that they will cut. I think personally, it's probably closer to 50-50. It's a coin toss, and I don't think they should cut.
The Dow Jones Industrial Average fell 0.2%. The S&P 500 down by 1%, while the Nasdaq lost 1.6%. Over in Europe, markets closed mixed. London's FTSE gained less than 0.1%. Germany's DAX fell less than 0.1%, while France's CAC 40 went down by 0.5%. Here at home, the country's trade deficit narrows in September, a bright spot amid global trade tensions and new U.S. tariffs on Philippine goods. The gap shrank at 14.7% to $4.35 billion from $5.1 billion a year ago, driven by strong electronics shipments. Exports surged 15.9% to $7.25 billion, while imports rose 2.1% to $11.6 billion. The United States reclaimed its position as the Philippines' top export market, accounting for 15.3%, or $1.11 billion of total sales in September. Electronics remained the main export driver at $4.02 billion, while China held its spot as the largest source of imports. Analysts say stronger export performance could help stabilize the peso and offset weak investor sentiment heading into the year-end. The Philippines is starting to chip away at its record debt, showing early signs of fiscal discipline amid a tough economic climate. The country's outstanding debt eased for the second straight month in September after hitting a record high in July. Total debt stood at just 17.46 trillion, just below August's 17.47 trillion, as the government paid off more borrowings than it issued. The Treasury attributed the slight decline to sound fiscal management and strong investor confidence. Domestic debt as of end September fell to 11.97 trillion, while external debt inched up to 5.48 trillion. For the final quarter of the year, the government plans to borrow 437 billion pesos, down 36.7% from the previous 3 months. A welcome development for all and a sign that the economy may finally be getting some breathing room. With price growth still well below target, the Bangko Sentral ng Pilipinas now has more flexibility to support growth amid weak demand and peso pressure. The central bank expects October inflation to range between 1.4% and 2.2%. The BSP says that higher prices of rice, fish, vegetables, electricity, and a weaker peso were partly offset by lower oil prices. Using that midpoint estimate of 1.8%, October inflation would be slightly faster than September's 1.7%. So far this year, inflation has averaged 1.7%, still below the BSP's target range of 2 to 4%. Low and stable inflation helps consumers, businesses, and borrowers, while also paving the way for further policy easing if growth continues to slow. Now, trade competition is heating up in our region as Indonesia moves to match Malaysia's new zero tariff access to the United States. Indonesia is now negotiating a similar deal on palm oil after Malaysia secured duty-free entry under a new trade agreement with Washington. Chief negotiator Erlangga Hartarto says that talks with the Trump administration will resume next month, right after the APEC summit in South Korea. He confirms that Indonesia is seeking the same zero tariff privileges for palm oil, cocoa, and rubber, its biggest exports to the U.S. Negotiations were earlier delayed by the U.S. government, shut down, but most terms are now nearly final. Indonesia, the world's largest palm oil producer, says that it remains confident that despite Malaysia's head start, the move highlights growing competition among ASEAN exporters and the urgency for countries like the Philippines to strengthen trade access and value-added agri-exports to stay in the game. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Let's check on Asian markets this morning. Right now, the Nikkei 225 is higher by 1%. Hong Kong's Hang Seng Index in the red, down by 0.3%. Same with Shanghai's Composite, down by 0.4%. And Singapore's Straits Times Index going the other way, up slightly, up by 0.1%. Here at home, local shares struggle for momentum, closing just above the 5,900 level on Thursday as investors turn cautious ahead of the crucial economic data, which will be out next week. The Philippine Stock Exchange Index slipped more than 0.5% to finish at 59.29, while the broader All Shares Index also ended lower. Value turnover was thin at 4.97 billion pesos, with many traders staying on the sidelines ahead of the long weekend. Market sentiment remains guarded, with investors waiting for October inflation, third quarter GDP results, and a new round of corporate earnings that could set the next direction for the market. There's no trading today as markets are closed for the All Saints' Day holiday. When trading does resume on Monday, analysts expect a cautious start, with the 5,900 level likely to hold as key support until new data provides clear signals on growth and inflation. Now, the Philippines joins the world's most prestigious culinary ranks as 9 local restaurants earn Michelin stars for the very first time. It's a landmark moment for Filipino cuisine, boosting tourism, jobs, and national pride. Paolo Barcelon was at that unveiling ceremony. He filed this report.
Filipino cuisine officially joins the ranks of the world's finest as the country's culinary and tourism scenes celebrate the launch of the Michelin Guide in the Philippines. Chef Josh Boutwood's Helm restaurant at the Ayala Triangle Gardens in Makati bagged the country's first ever 2 Michelin stars for his exemplary culinary techniques that mix the familiar in Philippine cuisine with something more memorable and unique.
Nobody can beat anyone's Lola's adobo, and that's always going to be the case.
Yes.
But so what we're going to try and do is to try and create something that they've never tried before, and enjoy that.
8 restaurants also bagged top honors. These are Asador Alfonso, Chelera, Gallery by Chele, Hapag, Inato, Casa Palma, Linamnam, and Toyo Eatery. Actor and restaurateur Marvin Agustin's Kochi restaurant, known for its roast suckling pigs and different takes on Filipino cuisine, was among several restaurants who bagged the Bib Gourmand Award, a distinction given by Michelin inspectors for restaurants offering the exceptionally good food at the best value. 3 restaurants of the renowned Forest family, Luso, Steak and Fries, and Ramen Ron, and Gordon Ramsay's Bar and Grill in Manila also bagged the Michelin Selected Award. In total, over 100 Philippine restaurants will be part of the 2026 Michelin Guide.
So you find the authenticity of the Filipinos' flavors, but also through open-mindedness. Chefs here are open to the world. Some have been trained outside, so they are redefining Filipinos' cuisine in an innovative way, but also reinforcing its identity.
Tourism Secretary Cristina Frasco calls this a big win for the Philippine tourism and the culinary scene.
Hindi lang yung mga restaurants yung makakabenepisyo nito, pati na rin po yung ating mga magsasaka, yung ating mga mangingisda, yung growers and suppliers natin dahil dadami po yung pupunta sa Pilipinas para kumain dito sa mga lugar na ito.
The restaurants in the 2026 Michelin Guide Philippines were selected based on 5 global criteria: quality of ingredients, mastery of technique, harmony of flavors, chef's personality, and consistency. Inspectors are already on the lookout for Filipino restaurants who may make it to the 2027 Michelin Guide. Paolo Barcelon, Bilyonaryo News Channel.
The U.S. Federal Reserve has cut rates again, its second easing move this year, while the Bangko Sentral ng Pilipinas has lowered policy rates by 175 basis points since August of 2024. Yields on local government securities continue to ease even as investor sentiment remains guarded amid peso weakness and governance risks. Yet, despite the uncertainties, many analysts say that this is one of the few markets with real clarity that bond yields are headed lower as most of the risk premium from corruption and currency fears is already priced in. Joining us now is Dino Aquino, the Vice President and Head of Fixed Income at Security Bank, his outlook on the local bond market. Hi Dino, thanks for being here with us.
Happy Halloween, Maiki.
Yeah, happy Halloween.
Spooky markets.
Spooky, yes.
Yeah.
PSEI down 9% year to date, but the bond market, that's what we're here to talk about. That's doing well against all local asset classes. The peso, the PSEI, with returns at about 3 to 4% for both short and long-term tenors. But let's hear it from you. How's the bond market doing right now?
Well, it's underperforming versus previous easing cycles. Basically, because as you mentioned,
Could have been more.
Could have been more,
Yeah.
right? Because you mentioned on the noise with regards to the politics, and of course the weakness of the peso and the PSEI is spilling over. Some of the risks are spilling over.
How much of that? I mean, you know, the corruption allegations, that all that noise, that political noise, has increased our risk premium. By how much would you say? How much has it dented, demand?
Well, the bond market is underperforming by 30 to 40 basis points, based on historical averages. Just to give you an idea, the spread between the benchmark rates and the 10 years around 50 to 75. So we're at 4.75 right now. So if you look at it in perspective, the 10 year should be trading at around 5.5, at least, right? But it's trading at around 5.9.
Yeah.
So it's underperforming based on historical averages by around 40 basis points. So because of all the risks that you mentioned, it's already embedded on the price already.
So all of that is baked into the cake.
Yeah.
Okay. So that said, what's your outlook for the bond market, factoring in the recent rate cut, the second rate cut by the U.S. Fed, which was supposed to be dovish but a little hawkish because he
took
because
December
of
out.
December.
Yeah,
because
he took
of
December out, and
right?
Trump's not going to be happy with that anyway.
Yeah.
I think I have one word to describe the market right now. It's just chaos. But in the bond market, it's organized chaos. Because if you look at the direction in terms of the currency and the stock market, there's really no direction. There's so much uncertainty when it comes to where it will go next year, well into 2026, how will it end in 2025. But if you look at the general trend in the bond market, it's on a downtrend in terms of rates. It's not just moving lower than we hoped for, but the downtrend is intact. So it's more of an organized chaos. Of course, there's chaos, there's volatility, but at least the clarity is there. So again, if you put a gun to my head and ask me what asset class I'm going to buy, I'm not sounding biased because it's the bond, it's an asset I trade, but I'll go with the bond market right now.
Okay. Yeah. Speaking of the currency, the swings, although incrementally maybe it seems low, they're pretty wild if you look at it,
It's pretty wild.
from a volatility standpoint, because this is what is keeping people back. How do you think the currency swings, hovering about at 59? How do you think that's affecting everything?
Actually, the bond market volatility heightened the past 2 to 3 days as the currency became really volatile. I think it was Wednesday. It hit around 59.20, 59.21. and then it closed at 58.60. So in the morning, the market was selling, and then in the afternoon, the bond market was buying it again. So they're actually moving in line with how the currency is performing also.
Which is hard. It's hard to attract foreign investors with these swings because everybody likes stability. And here in the Philippines, we're expensive, we're risky, and we're volatile also because of the currency. That makes it hard, especially as the Treasury wants to lift the foreign ownership cap on peso bonds to 10% as the Philippines moves closer to being included in JP Morgan's emerging bond index. How transformative could this be for liquidity and inflows?
We're already on the watch list. So that's a first step that we are part of it already. So we have 6 to 9 months relatively in terms of inclusion to be included. So if they lift that to 10% and we find some stability in the currency, then those inflows would come in and it will provide a better sentiment for the market.
Yeah, that's going to lift sentiment for the market. Now, inflation. Inflation remains well within target, but the peso has been under pressure. What's your outlook for everything, given that, the GDP outlook, the risks are to the downside because we essentially have no growth drivers?
Yeah, there's no growth drivers because of the canceled projects with the DPWH and all, because of the ongoing investigations. And I think consumer spending is also quite low. If you look at the car sales, I don't have the exact figure, but it's also low compared to last year. So there's really no growth driver. So the risk on the GDP is already tilted on the downside. Inflation, I think, would remain benign. Our house call is around 1.9, but personally, I'm looking at around 1.6. But again, those are just
well within the government's target.
Well within the target and below the target. So that would provide them further ammunition to ease and help the economy grow with the GDP tilting on the downside.
Yeah, that's right. Speaking of GDP, what's your outlook for 2025? The government has a 5.5 to 6.5% target. Everybody is just trying to catch up to the lower end of that. What are your thoughts on
It's
GDP?
tough to reach that target, if you ask me. Even Governor Remolona echoed that the 2026, he's mentioning that 2026 could average around 5.3. So it's still at low 5. So he's just looking at 2027 for the uptick in GDP. So that could mean that the BSP would remain accommodative well into next year.
Well into next year. So are you saying, are you expecting a rate cut in December?
Yeah, and more cuts in
and
2026.
Beyond?
Yeah.
So what's that looking? What does that look like for you?
So probably a terminal rate of around 4% for the benchmark rates, 4% or even low.
Now.
3.75 if GDP does surprise on the downside.
And we want to get your read on the economy right now. All things taken into consideration. What does that macro picture look like for you?
Actually, the macro picture is still very much good. Even if we say, for example, we print a GDP number in the third quarter of around 5%, we're just still the second best performing ASEAN in ASEAN next to Vietnam, because Vietnam is, well, they're doing awesome, I think 8% GDP. So we're still second compared to our peers. But I guess given that it's an election year, we would have hoped for
expected more.
Hope for more growth. But again, given the lack of
lots
growth,
of headwinds externally
headwinds,
and locally.
growth drivers. So there's still risks on that side.
Okay, but do you know where are the opportunities now? Is it in the 15 to 20 year tenors?
I actually like the 15 to 20 year tenors. If you look at the curve, entire bond curve, the rally happened. The rally actually is in the 2 to 10 year. So there's no gains realized in the 15 to 20 year. If GDP does surprise to the downside, well, hopefully not. But if it does, then the 15 to 20 year tenor will be the ones that will perform best. The yield curve would really flatten, because on a market that shows slow growth, the yield curve generally flattens.
Okay, all right. Thank you so much for your time this morning, Dino Aquino, the head of fixed income at Security Bank. Now, accountability and public spending takes center stage as Congress prepares to probe the controversial 389 million peso Dolomite Beach project. The House inquiry set for November is part of a broader push to restore transparency in infrastructure spending, a key issue for investors and development partners. Public Accounts Committee Chair Terry Redon says that the hearing will focus on possible overpricing, corruption, and whether the project was ever included in the official Manila Bay Rehabilitation Plan. Businessman Francis Lloyd Chua, supplier of the Dolomite Beach, is under scrutiny as his listed firm, Asia Best Group International, missed its valuation deadline for a major restructuring. Asia Best told the Philippine Stock Exchange that internal talks are ongoing, with initial results due by end October and the full plan to be presented on November 5th. Chua, who also holds significant interest in EEI Corporation, is consolidating his construction and infrastructure assets under the publicly listed vehicle, a move seen as strategic amid growing market pressure for greater transparency and governance. Rice output is holding up better than expected, a bright spot for the economy at a time of weak growth and rising import costs. The Philippine Statistics Authority, or PSA, reports that palay production hits 3.75 million metric tons from July to September, up 12.6% from last year. Output from irrigated farms grows 7.15%, while rain-fed farms surge 32.17%. Areas harvested also expand 15.7% to 792,000 hectares from a year ago. The Department of Agriculture reports 479,000 metric tons of palay losses as of October due to severe weather. From an earlier target of 20.45 million metric tons, the Agriculture Department now revises its 2025 forecast down to 20.3 million metric tons as climate risks continue to weigh on supply. Now, all eyes are on Busan as the U.S. and China return to the negotiating table, with outcomes that could reshape trade and investment across Asia. President Marcos Jr. says that the ongoing talks at the 32nd APEC summit could make or break the Philippines' business deals. The president stresses that the bilateral meetings between the world's two largest economies will be crucial to ending the trade war and reviving global growth. He says that the Philippines will use the APEC platform to promote technology, reliability, deepen regional cooperation, and participate in leaders' dialogues on sustainable growth and trade. Marcos is also set to meet the Filipino community in Busan and honor Filipino soldiers who fought in the Korean War, symbolizing the country's deep ties with South Korea. For the business community, these APEC talks are crucial as any breakthrough in U.S.-China relations could boost regional exports, investments, and confidence in the Philippine economy. Now, controversy hits the British royalty anew as King Charles starts the process of stripping his brother, Andrew, of his royal titles. He will also be evicted from the royal estate in Windsor. It's an attempt to quell the scandal over the disgraced prince's links to convicted sex offender Jeffrey Epstein. The 65-year-old Andrew had faced on-and-off controversy over his friendship with Epstein. This reached a new intensity after the release of a posthumous memoir by Virginia Giuffre a few weeks ago. She alleges that Andrew sexually assaulted her as a teenager. Giuffre died by suicide in April at the age of 41, but Andrew has repeatedly denied all allegations against him. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel, and have a good long weekend.